Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, April 28th, 2014. And this is brought to you by Triton Wave Consulting, which is home of the Triton Waves. The Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. All right, the first thing I wanted to look at tonight was something that I haven't looked at for a few weeks now. Oh, I haven't showed it to you, but they're correlated assets. And as the Dow is moving down on this, actually, hang on one second. All right, just had to get the right color out there because you couldn't see it. Okay, as the Aussie yen was heading up back in March, most of March, the Dow was heading up. So it was risk on, Dow up, risk off, and I would have thought that the Aussie yen would come all the way down, but it didn't, which was probably an indication that this wasn't ready, that the Dow was not ready to give up yet, or the not only the Dow but the E-mini futures. So as a result of this not going down and risk still being moderate to sideways, the Dow took off again. However, you notice that it didn't take out any old highs right here, and it started to go down again with the Dow. So finally, after not being in concert for this 2-week period in here, they are in concert right now. This is dropping off, and the Aussie yen is dropping off, which means risk off. And also I wanted to make a note that when the S&Ps were going up and the yen was going down, this is J61, which is the yen futures. Okay, so when they came back up here, when the yen started going up, the S&P started going down. Okay, so they're in concert, and that's the way it should work. But when the yen started coming down here and the E-mini futures started tipping new highs from back in April, right in here, right across here, the yen did not hit new lows. Okay, in fact, it was more or less just eyeballing it, looked like about a 50% retracement. So, and now it's taking off from that 50% retracement, and it looks like it's heading up to its old highs from back in here. In the meantime, if they're correlated, and they stay correlated this way, and they don't do any kind of funny business like they have been like 2 weeks in this area, then that means that the yen will continue to go up, and the Aussie dollar will continue to go down, and the S&Ps will continue to go down. Okay. One of the uncorrelated assets is copper. This is copper right here. And it looked like, you know, if there's copper, then there's building and there's shipping and everything else electronic. And that seems to have recovered a little bit. It took a massive hit down. It took a massive hit down to about I think it's like 280 or something. And it's starting to move up a little bit, so that becomes uncorrelated. And the bitcoins, of course, these are bitcoins over here. The bitcoins are anybody's guess. I just read an article tonight that the United States Treasury owns 144,000 bitcoins because of confiscations that they did. So they're one of the biggest single holders of bitcoins in the world right now. Okay. Enough of that. Okay, so now that we understand how the correlated assets are working, and that the yen looks like it's starting to move up, and the Aussie yen is starting to move down, let's look and see what's going on with the S&Ps. And by the way, I am doing this, it's right now 11 p.m. on Sunday evening, Central Standard Time, on Sunday, April 27th, Sunday night. And the S&Ps are up are up .5, 50 cents. And the, let me just check real quick. Okay, correlated with those assets, I was just checking to see what the latest price is on the Nikkei 225. It's down. The futures are down 180, which is a 1.25% move. So whether it's on the back of what happened on Friday with our market, or whether it's happened on the back of what's going on in Ukraine with all the build up on the border and trying to snuff out rebels, it's whatever it is, it's a nasty situation. And this market, even on good earnings, you're going to find stocks that are going up, like Apple jacked up to the upside, but that's not, Apple is not the general market. And everyone thought that the market was going to go up because of Apple's earnings, and it was only very temporary, and then it turned around again. So right now we're up 25.25, and you can see, let me put some of these lines back in here. You can see we are still well above the minor Triton wave and the major Triton wave. So just as a review, this first wave is Triton wave 1, 2, 3, and 4. So let's go back and look at this, and we'll get rid of that. Okay, so what I'm looking for here is to be on the, if you're very, very conservative, then you're looking for the 21 exponential moving average to cross the 55 exponential moving average, which is in the red. That's if you're conservative. If you're not so conservative, you're looking at the waves, and the waves are starting to go below zero right in here. They've been going below zero, but more importantly, T2 is going below zero right here. And the last time that happened, as I pointed out last week, was way back back in here, which was in December. So on the daily, it's a little bit lagging indicator, but we'll take a closer look. We'll break down the time frames. So last week when we came in, I was looking for, let me see, 1, 2, 3, 4, 5. I was looking for a move to the downs. I thought this was going to hold, and it didn't. It went right through it, and I actually started accumulating stuff in here for the downside. So I did take a little heat this week, but I dollar cost average, and I bought some more way up here and some more here. So my average cost is obviously a lot less because my spies got really cheap, but I kept them because I believe that this is going to take the market down, and in addition that this is. All right, let's do a shorter time frame here, and let's look at this on a, let me see, day only. Let's go to a 24-hour, and we'll do a 144 on this. So this is a 144 continuous chart. I'm looking for this to cross here. So sometimes the cross on the 21, the 50, 55 happen before the wave does. But if you look on it, on the 144 that is, if you look on the 55, it gives you a better clue of what's going on. Okay, so this is a really nice representation here. And you can, I'll show you again on the 13 how it looks like you missed it a little bit here, but on the 13-minute chart, it actually got you in here. So if you're going to trade these, if you're going to trade the futures, you have to do very short-term time frame charts. But this got you into a nice position. If you were riding this on the downside, then T1 on the 55 got you out here, which was, you know, if you had a trailing stop, you would have been out, but you definitely would have been out right in here. Okay, Also, this took you up from 1825. Well, let me redraw that because that's a little sketchy there. Not only did this cross to the upside here, but the 21 and the 55 cross. So that's absolutely perfect synchronization. Happened right about here at 1825, and it has not crossed back since until 2 days ago, which was Thursday, right in here. So this actually happened, and you want to wait for a confirmation. If you're conservative, you want to wait for a confirmation, or actually if you're a realist, not conservative, of the wave going below zero, and you pretty much would have caught most of this down here, right into this minor Triton wave right in here, and that was good for. Let me see here. It happened right here at about 1869 down to 1857. It's a short play, but then if you wait for a bounce, then you can play the bounces. But you really don't want to play the bounces on the. I mean, you can play this as an exit point, but if you look at a smaller time frame, let me see here. I gotta get out of this mode here. Okay, on a smaller time frame chart, this was about the same exit point. So I don't know what's going to happen Monday, but I know that all these moves below zero, as you can see on the 13-minute continuous chart, the last time this was it's below zero now as of Thursday of last week when this happened. So you caught all of this chunk. The last time it was completely below zero was when it launched up here. But of course, check out this. This is T1 crossing almost exactly at the bottom. It was confirmed by T2, further confirmed by T3, and further confirmed by T4, and completely above zero this entire stretch all the way to here. So actually, even if you didn't get in until this was above zero, this cleared zero completely, you got pretty much this 1830 up to wherever this landed here, about 1870, over a, let me see, April 15th to April 25th, so over a 10-day period. And of course, if we can break this down, we can go into like a 377 tick chart, and you want to, you know, as it's coming down here, these waves are kind of a little bit iffy on T1 and a little bit on T2, so you have to wait. You're really looking for anchor charts, or you're looking for T4 as an anchor. So once you get out here, 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 or here, especially you're looking for T4 to go above zero, you can, at least you lock in some of your profits and take a ride back up to the minor wave, and you don't get back in it until it goes back below the minor wave. The 21 crosses the 55 and confirmed by T1 going below zero. So you cut this little bit over a 1.5 hour period, which is about from 1861, it's about 10 points. And then you can do the same for this on the way back up. You can either wait for it to cross or do the wave. Okay, let's take a look at some stocks here. All right, let's take a look at Goldman Sachs. And these are what you're looking at now. I have about 110 to 115 videos in the last year and a half up on the site, up on YouTube. If you find one, you can find them all. So this is the latest incarnation of the Triton waves, which were developed in the past 8 or 10 weeks. Okay, this is a 55-minute cash price on Goldman Sachs, and I like starting with the 55 minutes because the waves, all these waves are so long term. To the newer ones that on a daily sometimes you miss what's going on, so you have to do a shorter one. And I don't like to look further back than a 144 or a 55 minute. So we'll look at the 140. We'll start at the 55 minute on Goldman, and you can see when this took off right here around January 7th, and this was the peak. Now it's going to come down. It's going to come down 5 points. It's going to go up like 7 points, but mainly you're looking for this to come down as long as T1 is below 0. Your target is this major wave right here, a major Triton wave, and that gives you that whole clip there. Now, because this is rounding up here, you don't want to take a position until the wave tells you what to do. So it's not just bouncing off this major Triton wave. You want to make sure that this goes above 0, because this could flirt around this area here and then go to the downside, and this never makes it up. So you want to wait till this goes above. And at this point, even though this came down here on one morning here and scared the living daylights out of everyone, basically the trend was up. And if you trail your stop, once you get to lofty areas like this, and this looks like at least a 618 retracement of this move. Whoops, my arrow slipped a little bit of that move. Let me clear that out and start with some fresh arrows. And then you're definitely out here, which is right in there. And that's just following the hourly. That's not following the 5 minute or the 21 minute. That's just following, these waves aren't going to like flutter up and down every day. So you actually can go on a lunch break or take a day off and just look at it temporarily. Or look at it every once in a while. You don't have to stare at the computer. And yes, it's going to come down, hit that, and as long as this is below 0, you can stay in it even though it's going to go against you and you're going to like cringe, but look at what you got if you held on. And then as soon as this starts rounding up again, you wait for either this to cross and you're out, or you just trail your stops. So let's look at this on a smaller time frame, like a 21, and you get a little bit better picture on. This is kind of a little late to the party. Let's look at a 5 minute and see what that gets you. Okay, I see a pattern here, and all these patterns are going to be different for different stocks. But this crosses up here, bing. When this crosses, okay, here's a sequence of crosses: 1, 2, 3, 4. And you can wait for the 4th cross, get in here, and it doesn't cross back again. Well, you want actually, when you're playing one of the waves, then your exit point is the wave, is 1 or 2 waves before it. So you either get, if you're following Triton wave 4, then you exit either at 3 or 2, because you don't want to hang on. But it's still, all in all, it's a nice move. It's about, what is this? 1, 2, 3, 4, 5, 6, 7-day move for 8 points. It's not a bad stock move. It's an excellent option move. All right, here's an example of when you don't want to follow the same time frame that you have on most other stocks. For example, if you were following LinkedIn on a 55 minute cash price, and you were looking here, you only would have caught, like half to a third of that move. Here you would have caught a little bit more, but this pattern is kind of a little zigzaggy. So you have to let's look at the 21. It's kind of like floating around, seeing where the best plays are. And this really isn't following very good patterns. 79. Actually, that's not too bad from here to here. From here, okay. Since this was below zero, then you really have no business playing the upside. So let's go to a 144 and see what's playing out there. And I like the 144. Not a heck of a lot of data. Okay, so I'll tell you, I used the 144 when I was personally playing this, because I like the fact that, okay, this moved below zero right in here down to the minor trend line, and then moved back above zero here, and I did not play that. I didn't play that, but I started playing it when it broke below. When it broke below right in here, when it not only the 8 and the 28 and the 55 cross, but the 8 and the 55 cross below the minor Triton wave, and this was below zero. All these were below zero. So I started playing this based on the 144 and T3, T4, T2, 3, and 4 being below zero. And I caught, well, of course, I didn't take any profit here. I got a little bit more in here, but this is the piece that I played, and I played it right down into this major Triton wave. Now, since then, if we blow this up here, that took one bounce, then came back to the same wave, took another bounce, and then it looked like it was going to take off, but because these were so ensconced below zero, it just did a flip to the downside, and now it's threatening, with a 13-point move on Friday, it's threatening to take out these lows. So where is this going to go? Let's look at an even bigger time frame chart, which is the daily, and you really can't see a lot. Actually, I don't know where it's going. Let me look at a 21. So for this, I'm just going to follow this down. Let's look at the 55 again. I'm just going to follow this 55 down until it's far enough away from the minor trend line that it looks like it wants to snap back, or that one of the waves goes above zero. Or actually, you know something? I think we can play the what's a 5-minute look like on this? Actually, this is good for a day trading one, because a 5-minute chart are kind of quick plays here. All right, down below zero, confirms, and then confirms, and you can take it at any one of these confirmation points. This one would be here. This one would be right in here, and you would have made money on all of them. And since this is touching a new bottom, this may pop a little bit on Monday. If it gets back up to 169, let me see. On the daily, what's that going to look like? 169 on the daily is going to be right about in here. If you're lucky enough to see 169, which would be an 11-point move, that is definitely a opportunity to short. It may just go by you, and it's going to be like catching a falling knife. So sometimes you just have to leave some of that stuff alone. All right, I'm going to look at one more and then call it a night. I'm looking at Netflix here on the daily, and this is uh, okay. You can see eight 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 282.57 right here is where the minor trend line is. Okay, so the 8 and the 21 crossed in the day. The 8, I'm sorry, 21 to 55 crossed back here about 12 days ago, and all of T1 is below zero. First time that's happened since back here in July when it was selling for about 60 bucks, 65 bucks, and just based on this chart, just based on these waves here, if you got in when this went above, when the purple line went above zero, or the heavy green or the light green, and just walked away and didn't touch it until this went below zero here, look at this humongous gain you would have made. That's got to be like a 350 point move. Okay, so now I like this to the downside. Based on what's happening to T1 and T2 slipping below zero, first time since September of 2013, and this is also heading down, and T4 is heading down. So my target for Netflix before there's any kind of a serious bounce, there may be some minor bounces in here, but long term, like out of the money options with give it a good 60 or 90 days and just pay a little bit more for them. But my target is 282 on Netflix. That's all I have for tonight. Enjoy the rest of the weekend. Well, actually, the weekend's over. I will see you at the next update. Good luck trading. For any of you who are interested in trading gold, this is, you can just read about it. You know, pause it, read about it. If you want to get in touch with me about it, then let me see here. You can find me at tritonwaveguy@gmail.com. And my name is Rodney, Julian, and have a great evening and good luck trading this week.